Good morning, ladies and gentlemen. Welcome to the instructional videos for inventory. Now, there are going to be two videos, and the first one, which this is, looks at the theory behind inventory management. So it is the next video that is going to show you how to input the inventory into Sage. But for this video though, we are going to look at the principles and the double entries behind inventory management. Now, the first thing I want to note is that on screen, I have the listing of the opening balances for January 1st, 2021. Now, as far as the inventory is concerned, these general ledger accounts have been coded from the 12050, which is at the top, that starts monitors and inventory, to 12800 phone cards. So notice that the GL codes for all the inventory items start with the number 12. Now we have gone ahead from the first video and put in the opening balances for the different inventory groups. So when you were doing your journal entry, all of these figures that relate to inventory were recorded as debits in your opening journal entry. Now, the reason why I'm starting here is that these inventory accounts, I want to refer to them as control accounts. Control accounts for your inventory. Now, coming up from first year up to third or fourth year, you would have understood or been exposed to different control accounts, but not necessarily one for inventory. Now notice that there's a code 11,000, an ID code for the general ledger account, 11,000 for accounts receivable. And when you are entering the information from Appendix 2, this total was the same total for that Appendix 2 list, which related to the customers and their balances that are owed to you. Now there's another control account, which I'm going to scroll to, which is 20,000. And this control account is used to manage your suppliers. So this figure of $4,698,549, which was entered as a credit in your opening journal from Appendix 1, is the control total for accounts payable. So all of your vendors on Appendix 3, those persons who you owed, that total came to $4,698,549. So these two control accounts are what you are familiar with. Some textbooks call them total debtors accounts or total creditors accounts, because essentially they are showing you the overall total for all your suppliers in this instance and all of your customers in this instance here, 4,092,336. But for inventory, we go a bit more detailed in that we have a series of control accounts for the different groups. Now the monitors, the printers, the processors, these are all total values for the cost of the inventory items that you have in store at the start of the financial year. Now remember, these inventory totals have a detailed listing, and this detailed listing is Appendix 4. So I'm now going to jump to Appendix 4. Now Appendix 4 would have been compiled through a stock count. So it means therefore that you would have closed the business for the day, namely 31st December 2020, and went through and counted all of the stock items which would have been previously organized to ensure that there is no double counting or that no inventory is missed. So when we look at our processors, for example, there are 4 different examples of processors in your warehouse. Now on your Appendix 1, and let's go back to it, notice that your processors total is $127,696. Now this total represents the combined value of those 4 processors that we looked at on Appendix 4. 1 proc, 2 proc, 3 proc, 4 proc. Now from your stock count, it shows that you have 8 of these particular stock items, 8 of them in stock. You have 6 for the 2 proc, 4 for the 3 proc, and 12 for the 4 proc. Column E shows you what you paid for these items to get them into stock. Now, if you wanted to find the total amount of 1 proc, the cost total, you would take your inventory count and multiply it by your unit cost. So this tells me that the total inventory value for 1 proc in stores on the 1st January 2021 is $11,912. Now if I copy that formula and add up the total for this category, notice that I get back the same $127,696. So this Appendix 4 is the subledger to the control totals that we saw in Appendix 1. So I hope you get that clearly. Now the inventory listing also has other information apart from the ID, the unique ID for the product. It has a description for each of them. It has the name of the vendor that they would prefer to purchase from, and in this case, the preferred vendor ID is INT, which represents Intel. You already know what this next column represents, and as you know, this represents what was counted at year end. The unit cost column, as I said earlier, shows you what you paid for these items on your last purchase. And finally, a minimum stock level. Now in real life, there would have been lots of other pieces of data to properly define each inventory item. For example, if you recall from inventory management, there are certain stock levels like maximum, minimum, reorder level, and reorder quantities. Now, all of that would normally be required, but for this project, we're keeping it simple and just trying to show you the basic elements of the different types of transactions. So for today's video, we just, as I said, want to highlight the principles behind. So the first principle that I've just explained is the connection between the control totals for the inventory on Appendix 1 and the subledger or the details to the control accounts found on this Appendix 4. Now, the other thing I wanted to highlight is that you have three different categories of things, and I'm going to call it things, on your Appendix 4. Now, the bulk of them are stock items, and these will go in the inventory section of Sage. But then I have two other interesting groups, and I'm scrolling down to them. The first one is the service items. Now, in your project, you do offer service and support to customers, and you charge them $3,000 for labor in terms of repairs. You also have a third grouping, description only items. Now, it is interesting that these two groups show up on your stock listing, but how it is with Sage is that anything that goes either on a purchase order or on an invoice to your customer or a purchase order to your supplier, it has to be fed through the inventory data. And you're going to see what I mean when I reach the data entry in the other video. So suffice it to say that when we go on to Sage, in the inventory section, we have three classes of inventory that we need to recognize. The stock item, which was the first one I highlighted, which accounts for 90% or 99% of your data on this appendix. The other category is service item, and the final one is description only item. Now, when you highlight those or select those classes of inventory on Sage, the screen, the data entry screen, will be completely different for all three classes. All right? Okay, so now we move on to the double entry behind this system. So I'm going to jump into Microsoft Excel and go to a clean page. I'm going to magnify the screen a bit, and I'm going to take you back to your earlier accounting days. Now, technically, if we're managing or keeping inventory records, we have two systems available. We have the periodic inventory system, which is not the one we are using for the project, and we have the perpetual inventory system, which is the one we are using for the project according to your project instructions. And again, I do hope that by this time you have read it even once from front to back. Now, why am I mentioning these? In entering the individual data for your stock items, Sage requires three general ledger accounts. And for you to fully appreciate why that is so, I need to explain this second principle, which deals with the double entry behind Sage. And this is a type of, this piece of information can pop up in your interview. So you make sure that you fully grasp this. Now, in your earlier accounting days, including your CSEC, if you did CSEC accounting, we would have told you the following. If you want to purchase inventory, and in some books it's called merchandise. If you want to purchase inventory, this is the journal entry you use. You debit purchases and you credit suppliers if you are going to be ordering or taking the goods on credit to pay later, or if you're paying immediately with a check, you credit bank, or if you're paying immediately with cash, you credit cash. So this is what we taught you when you just started accounting. Now then, when you sell stock, we also had another set of journal entries. Alrighty. Now, selling stock. This was the journal entry. You debit customer if they are purchasing goods from you on credit, or debit bank if the customer is paying you by check immediately as the goods are received, or they're paying you by cash, in which case you debit cash. And then you would credit the sales account. And that is how you record the sale of inventory. Now, at the end of the financial year, if you want to determine your stock value, guess what you have to do? A stock count has to be done. If you want to find out what is the value of stock in your warehouse, it means then that you have to do a stock count. And that is only if you're doing the periodic system. Good. Now let's go over to the perpetual inventory system. I'm going to run the process again. If you're going to purchase inventory, let me just copy this. If you're going to purchase inventory under the perpetual system, the main difference here is that rather than debiting purchases, you debit your inventory account. And in the situation with the project, it's going to be the inventory controlled accounts. And these inventory control accounts are the ones which are coded starting with the number 12. Remember I mentioned that. Now, when you sell goods, you still debit customers, bank, or cash, and you still credit sales. However, there's an additional journal entry that says debit cost of sales, credit the inventory control account. Now, if at the end of the financial year you want to determine stock values, you don't need to do a stock count. In fact, all you have to do is query the closing balance on the inventory accounts. And this is the beauty of the perpetual inventory system. And that is easily done if you have a computerized accounting system like Sage or QuickBooks. So whether we're using FIFO, LIFO, or AFCO, it doesn't really matter. What is important is understanding the journal entry behind the perpetual inventory system, understanding the advantage of not having to do a stock count whenever you need a stock valuation. So whether you need a stock valuation at the end of the year, the end of the month, today, or any arbitrary time, it is just a matter of querying the closing balance on the inventory account. Okay, great. So we're getting somewhere. Now, the next thing I want to do is to jump into the inventory panel on the navigation pane. So let's do that. And look at some of the icons that we have. Now, in adding the inventory, this is a window that we need. We click on that icon and we click on New Inventory Item. Now notice the screen that we have. I have maximized it. These are the 3 general ledger accounts that every single stock item will require for you to enter, so that the computer knows which accounts will be affected when goods are purchased and which accounts are going to be affected when goods are sold. So you need the sales account, an inventory account, and a cost of sales account. Okay? So I wanted to highlight this very important feature before we go into adding the actual data for each inventory item. Now, the last thing I wanted to highlight before we go into the next video that deals directly with creating or adding your inventory is to look at your chart of accounts. So I'm glad I'm doing this because I want you to understand in your mind how all of these documents are linked. So I'm going to remove this window called Maintain Inventory Items. We're going to come back to it when we're actually entering the inventory. But I want to go to the chart of accounts on Sage. So let's go there now. We go to Maintain, Chart of Accounts. Then I go to List on the icon bar. And then I maximize my window by clicking on the box to the top right-hand corner of the account list window. Now, why am I bringing you here to wrap up? Here's the reason why. If you look at the groupings for inventory, we have computer systems inventory, monitors, printers, other peripherals, etc., etc., etc. Now, this particular general ledger account, if you try to delete it, Sage will not allow you to, because it's a necessary account to have if you're in the business of buying and selling computer parts. Now, for the general ledger entries for each of the different categories of sales, cost of sales, and inventory, I need you to recognize something. Let me jump into Appendix 4. when we look at processors, okay, remember I told you that we're going to need 3 accounts. What are the 3 accounts? A sales account, a cost of sales account, and an inventory account. Now, the inventory account is clearly defined. Processors inventory, clearly defined. The inventory account for motherboard is clearly defined. It says motherboard inventory. But when it comes to the sales account and the cost of sales account, a number of these groups are going to fall under the grouping sales computer systems inventory and cost of sales computer systems inventory. And what are those items from Appendix 4 that is going to fall under that category? Computer systems inventory sales and computer systems inventory cost of sales. Any part that would go into creating a computer system will fall under that category. So the processors, the motherboard, the CD-ROM drive, the DVD drive, the hard drive, the graphics card, the memory, the monitor, the sound card, all of these that I have mentioned are a critical component in one computer unit. So if you're going to build one, you are going to need these items. Now, everything else, we can group them as peripherals. And I want you, when we're looking into the second video, to note how we're going to capture those 3 general ledger accounts. Okay? Good. So I think that is enough theory for you. And so I'm going to wrap up the video here. Sorry. So I'm going to wrap up the video here. And that would mark the end of this introduction. So I do hope that you would have watched it before going on to the next video where you're actually handling the data entry. Great.